Welcome back. You're watching Stock Watch this weekend. Joining me to unpack your stock-related questions this afternoon is Khumalo from Vestact. Be sure to send your questions via email to stockwatch@bdtv.co.za or via SMS on 41392 or on X @BusinessDayTV using the hashtag StockWatch. Thanks so much for your time, Bright.
Lovely to be on your show, Zinati.
Yeah. I mean, just taking a look at what's really happened on the macroeconomic scale, I feel like we've had quite good news that should really be buoying the markets right now. Is that the feeling that you're getting, or maybe the markets this week aren't quite following the kind of good news that we've seen?
Look, the markets are following the good news that we're seeing. I mean, I think the whole world was worried about the Japanese carry trade about 2 weeks ago.
Yeah.
Everything was melting down and everyone was worried. The dollar was strengthening. I think we hit 18.4, 18.5 to the US dollar, and then we came back, below 18, call it after the 8-day washout, right? And it's like nothing ever happened. If you look at US markets in particular, that S&P 500 is a stone's throws away from all-time highs. So, so much for all of the panic that was, that had us by the throat in the markets for those couple of weeks. It was literally those couple of weeks, just 2 weeks in particular.
I'm actually even seeing, as we're talking, the JSE also, another record high or
exactly.
Day high today. Over 84,000 points. Impressive.
I'll take that. In fact, I should be wearing my All-Z 100,000 cap today, to commemorate this moment, because, one all-time high leads to the next. That's how usually momentum works in markets. So, and I've got some interesting insights, and in one of my stock picks. So, you'll be interested to hear that.
Looking forward to that. Well, as we're talking about the S&P 500, I know obviously you are a very big watcher of those tech stocks. What's happening on that front? Are those also following the upward momentum?
Correct. The reason why the market has bounced back so much is because of tech stocks, because they were, heading into that meltdown in Japan. They were sort of like left aside, and everyone was getting distracted by the Russell 2000, which is basically small and mid caps that are listed in the US. So that was the chat. That trade has sort of leveled out at 13-14%, call it, while the S&P 500 Nasdaq trade is at 19-20% year to date. So it's like I said, close to all-time highs. So tech is back, and it's firing on all cylinders. And I would like to say, I know I'm probably speaking my own book here, but it sort of makes sense considering how much cash, all of these businesses are sitting on. Usually when these crashes happen, it's because of a trend that propels these companies to the top, but there's no cash flows to actually support the trend. Here we've got a trend that's going up, with these companies printing cash left, right, and center. So I don't think any big crash that might happen in the market will actually be there for long, because these businesses, it's either they're going to buy smaller incumbent technologies that are going to be bolt on to their businesses at cheaper prices because they're sitting on all this cash, or they'll simply, start returning some of that cash. I mean, that's what we've seen from the likes of Meta. Meta now pays a dividend. It sounds even bad when I say Meta pays a dividend, a big technology stock paying a dividend.
Exactly.
But that's what's happening these days. Yeah.
It's so interesting, Bright, because, I mean, there's usually so much panic and such a knee-jerk reaction that obviously it filters through to the big tech stocks. But, I mean, they're quite resilient, and it's quite interesting to say that even if we do get to a point of a crash, that it will affect the smaller companies that maybe can't withstand the storm, and then you'll get these big companies kind of zoning in on them, buying them out because they're cheap. So it's quite interesting to kind of see the kind of narrative that not all animals are equal.
Not quite. I think that in a crash, I still think the top companies will get affected the most because those are the widely held ones.
Yes.
So, for example, if hedge fund managers decide to sell all at the same time, you're all going to feel the pain.
Yeah.
But put differently, when index funds also decide to sell something, I don't know whether that will ever happen because they just buy the index.
Yeah.
But if that had to happen, we'll all feel it as well, because these index funds hold a lot of these top 10, top 20 stocks, which actually account for, call it 60, 70, 80% of the index on an absolute basis, on a market cap basis, which is absolute dollar basis, which is troubling for some. For me, it's comforting because it makes sense that those guys are the ones that command the most market cap, because they're the ones that provide the most value. So you get what you take what you get, or whatever the saying goes.
Well, something that investors have been taking is Palo Alto. There have actually been a lot of questions on Stockwatch on cybersecurity companies. I guess maybe there's even more of a keen eye after what happened with CrowdStrike, and even in that week or two following that outage, there were a lot of analysts picking CrowdStrike as their stock picks. Palo Alto, we also saw, when was it, last week, they released really strong results, and there was very, very strong buying going into that stock. Is cybersecurity where it's at this point, particularly with your Palo Altos and CrowdStrike and the like?
If you look at the total market cap of, call it cybersecurity, or just call it, OPSEC, whatever you want to call it, it's a very small niche currently as compared to the overall, I don't know, call it 8 trillion of market cap in US stocks. It's a drop in the ocean, but there's a lot of potential for that market. I mean, I've already had a whole stock picks episode on that, talking just the three that I liked in the space, including CrowdStrike, by the way. And I still like CrowdStrike. I like it even more now at these prices. Palo Alto Networks was one of the companies that, came before it was called operational securities. They used to provide, server security for big companies. That's how they marked themselves in the market, and they since, grown with the growth of, the cloud market, because there's the necessity of keeping everyone's data secured has become more and more important the more and more we move away from being the one responsible for the safety of our own security here, with our own in-house servers, to going outside, to employing someone like an Amazon Web Services or a Microsoft Azure to do the hard lifting for us. Therefore, these companies are, the mediator to ensure, they come in between there and make sure that the data is secure. And it's hard to get into the data if you're using numerous penetration methods that hackers use. So I like these companies, and I think for a fact they should be touted more. They should be talked about more, because they're part and parcel of our daily lives. I mean, your normal OPSEC as an individual also is quite important. I did make an example of how people actually, lose a lot of money by just giving random strangers their password, by being conditioned, to giving them the password without noticing that you're giving a stranger at the bar your password. And then it ends up being a horrible night for you, fighting for your life, because, they've withdrawn 30, 40, 50,000 from your bank account, because you were not paying attention when you were typing your password, when this person was probably saying, can I have your number, or can I give you my number? It's something as easy as that. So these companies are very crucial, from the ones that secure, individual apps, like banking apps, etc., to those that secure your day-to-day movement on your email, like the likes of CrowdStrike and Palo Alto Networks, and all these many businesses that operate in the space.
Well, Bright, we are going to be needing that security from next month, when people start withdrawing from their two-pot retirement system. There's a very interesting question here. With the pending two-pot payout looming, Will we experience a stock price drop with the anticipated demand? I would imagine that because there would be more liquidity, that they'd actually maybe be a stock price a hike. But also, are you anticipating any kind of significant movements in terms of, some of the stocks that we have on the JSE, or is it just going to be just a short-lived thing, and actually maybe people don't really have that much money?
Yes, there will be, a sort of think back during 2020, middle of COVID, and people getting their steamy checks, $5,000 in the US, market going insane. But that was a bit different because it's money getting from the government,
Yes.
and you're sitting at home bored, you don't know what to do. So the gambler inside you says, hey, become a stock trader.
But
so,
this is your money that you worked for.
So this is exactly, this is very different. This is money that you work for, that you had put aside.
Yeah.
Obviously, there's a cap. And I think estimates currently are saying between, call it 35 and 45 billion rands is going to, come from this two-pot system that they expect individuals to withdraw. I'm not going to be the ones that, are eating lunch money today that could be worth a lot tomorrow. So I'm not doing any withdrawals on my side, on my IRA, but each to each his own.
Well,
in terms of, it's going to be very different in terms of how it stimulates the economy.
Yeah.
Because we're not talking amounts here that you could buy a car with, but we are talking amounts that you could spend nicely with your friends, So think of basic retail products like clothing, think of, going out stops. So think of restaurant,
or
QSRs,
maybe even tourism.
Lots of tourism, because that's always the in thing, in this Instagram life. It makes sense. So maybe, lots of, pumpy we want to be seeing there by tourism. I like that. So Instagram is going to look good for the next couple of months.
Yeah, it's quite interesting. I mean, you've already answered the second part of that question, what companies are likely to benefit. Is it like another Black Friday event? It might be. And it's actually quite interesting because even Spur was actually saying that they think they are going to get a boost in liquidity from that. So
Spur is on the ball. They know us. They know us, the customers. They're on the ball.
Bright, before we get to your stock pick, I quickly want to go into Nedbank. There was a question here. Yesterday, it seems there was a 3.7% drop in Nedbank. And the question was it the weak rand? I understand that the rand was over 18 rand against the US dollar yesterday, but it has gone back below that. But really, the viewer also asking, is the stock a buy? Yeah, banks have really been touted as buys at this point. What do you make of that, in particular Nedbank?
So we don't own any banks currently. As a disclaimer coming into this, we sold our last banking share, which was JP Morgan. I think it was beginning of 2022. So it's been a while since we've held a bank, but we do hold proxies to banks like Visa, MasterCard, and all sorts of payment systems that sit in between there. And actually, they have a higher margin, and that's a whole different conversation. But coming back to Nedbank, it's not a company that I follow with keen interest. But I wouldn't be worried about day-to-day movements if I was a long-term shareholder. So it comes again to the temperament of the individual who's looking at the shares. Are you looking at the share to buy? That's a different story. But if you're looking at the shares, you already own them, and you're asking about day-to-day movements, maybe investing is not for you.
Yeah, that's a sobering comment. Well, Brighton, let's get into your stock.
Or maybe you've invested money you were not supposed to invest.
Even to start off with. Okay, very sobering. Brighton, let's get to your stock pick for today. What are you hanging your hat on?
So I looked at this little company, Combined Motor Holdings, or CMH.
Yes.
So basically, they're involved in the retail of new and used vehicles. I don't know. So they've got dealerships across, South Africa. They are tightly held. They've got workshops. They sell parts. They even have First One, which is You know, when you go to Cape Town, you go to East London, wherever, you could hire a car with them, and they've got incredible service. I did, when I went to the Eastern Cape, I did use them, which is quite interesting. I didn't know it was owned by them then, but now after doing some research,
yeah,
I'm well equipped.
And don't they have a partnership with FlySafair?
Yes,
First one,
correct.
yes,
So
I think
they've got a
yes.
partnership with one of the airlines. Yes, I think that's how I got into actually.
Yes.
Getting a car there with them at a decent discount.
Yeah.
So in the past, so basically when we started looking at it, this thing was had a dividend yield of 14%. In 5 years, it sort of bumbled, you know, sideways with not much action, while the underlying, so the revenues, especially on second-hand cars, was you know, growing. Even on brand new cars was growing. Therefore, earnings is going as well, going in the right direction. They pay the dividend. They've never faltered on the dividend. So it's a solid, you know, mid-cap holding that was worth 1.9 billion. And then I blinked this week, it's now worth 2.5 billion. I'm like, what's going on? So the market is finally waking up to this one. Maybe there's a catalyst, that we don't know about, the takeover or something along the line. So I like it at this point, especially since there's now new and refreshed interest into the share price. We're seeing that the volumes there are picking up. So I'm looking at CMH, I'm like, you're still getting it, by the way, at a historic dividend yield of 11%. Okay. So it hasn't been eroded yet. So there's still that exit to say, if you had bought and you didn't get what you wanted,
yes,
or, you know, the thesis didn't happen, you still, you know, can double your money in 4 or 5 years. So that's still decent in my books.
Well, all right. Well, thank you for that, Bright, and hopefully we can start to see more action there as we head to September, where we might see interest rate cuts and the car industry might start to look a little bit more interesting. Thank you so much.
Sexier, exactly.
Exactly. Thank you so much for your time. That was Bright Khumalo from Vestact.